Now, today we'll start the next aspect of your fixed asset, or you can say the long-term asset, that are extractable natural resources. And natural resources are the sources which we can get from nature, and it can include your extractable resources, or those resources which are we can get from the land, for example, your timber, standing timber, etc. So natural resources consist of standing timber and resources extracted from the ground, such as oil, gas, and minerals. IFRS defines extractable industries as those business involved in finding and removing natural resources located in or near the earth's crust. So these are obviously your resources, and with the passage of time, when you extract these resources, or in case of your standing timber, when you are cutting them and use them in furniture or any other kind of construction, so obviously there would be a certain kind of deficit in that resources. So as when we talk about standing timber, so standing timber is considered a biological asset, and IFRS rules suggest that under IFRS, and in the year before they are harvested, the recorded value of biological asset is adjusted to fair value each period we have to adjust its fair value. Uh, Secondly, when we talk about extractable resources, first of all, we have to address and we have to ascertain that what would be the acquisition cost of an extractable asset, just like we have considered plant asset, and we first we have to identify that what would be the cost which should we include in our accounting records. So, in the case of extractable resources, we have to determine the acquisition cost, and these acquisition costs consist of price needed to acquire the resource and prepare it for its intended use. Obviously, when you get that resources, it would be in a wrong form, so we have to convert in the form that would be helpful, and that would be in a form that you can use in a certain kind of your activities or certain kind of production. So when we talk about extractable resources, so we cannot use the concept of depreciation in extractable resources. We actually use the concept of depletion, as when you take out the resources and use these resources, so there would be certain decrease in the reservoirs, so that we can call it depletion. And depletion is just like the procedure is mostly like the depreciation one, but in this case we use depletion expense instead of depreciation expense. So depletion is actually allocation of the cost to expense in a rational and systematic manner over the resource useful life. We have to determine that how much this resource can help us, and that would be the resource useful life. So when depletion is addressed, depletion is to natural resource as depreciation is to plant asset. As for plant asset, we use the concept of depreciation, as it will shows the decrease in the efficiency in the usage of that asset. Obviously, when we use depletion, so that depletion shows the decrease in the reservoirs of that natural resource. So company actually use a unit of activity method when they use depletion method. Depletion is generally a function of the unit extracted. So we'll see that how much unit is being extracted. So based on that, we will use the concept of depletion. So this can be explained with the help of an example. That is actually Lane Company invested 50 million in a mine estimated to have 10 million tons of coal and no residual value. In the first year, Lane extracted and sells 800 tons of coal. Lane computes depletion expense as follows: like he's has invested 50 million, and 10 million of it has this estimated unit capacity of 10 million. So we divide 50 million with 10 million, so we'll get $5 depletion cost per ton. and 5 multiplied by 8 lakh tons, that gives 4 million annual depreciation. So the annual depreciation expense would be depletion expense, 4 million, and accumulated depletion 4 million. And in the case of its presentation in the financial position, or you can say in the balance sheet, so coal is an asset, so that its cost is 50 million, and we have deducted accumulated depreciation of 4 million, and now the adjusted cost of your, or the book value of your coal mine is 46 million. So extracted resources that have not been sold are reported as inventory in the current assets section. So another aspect is your intangible asset. And intangible assets are the kind of asset which cannot be seen or you cannot be touched, but they are there, and they will be there for the organizations to provide future benefit. Intangible assets are rights, privilege, and competitive advantage that result from ownership of long-lived assets that do not possess physical substance. So there are many kind of, obviously there is no physical substance in case of intangible asset, but they have a potential to provide benefit to the company. That's why these are considered as your assets. And when we talk about this intangible asset, they have limited or indefinite life. And the common type of intangible assets are your patents. Patents are actually the rights on your, or any formula or any kind of thing that will give you right to produce that product specifically, which you for a certain time period. And almost these are your actually kind of thing that will provide you benefit. Then copyrights are actually associated with a certain kind of work of art, or your movie, or your this. And goodwill is your good standing in the market, and it obviously provide you benefit because people are very positive about your company. So this goodwill is very important because whenever you want to sell your company, on whenever you want to to ascertain the value of your company, so obviously goodwill play a very important role in that. Then trademarks and trade name, obviously the name of your business, and you'll purchase that name, so that's something very much important. And franchises or licenses, obviously franchises and licenses are the rights of any kind of brands for which you are working, or the franchise you have purchased. So these are your intangible assets. Then when we talk about your intangible asset, what are different aspects associated with intangible asset? Because in case of intangible asset, we use concept of amortization. And as in the case of plant asset, we used the concept of depreciation, and in the case of extractable natural resources, we have used the concept of depletion. So in the case of your intangible asset, we use the concept of amortization, and we have to amortize to expense. Then because it has a these this concept can only apply to those assets which have those intangible assets which have limited life. So intangible assets amortized to expense and credit asset account. For example, companies classify amortization expense as an operating expense in the income statement. But in the case of the intangible asset which have indefinite life, so we cannot calculate amortization. So similar to these are the intangible assets are very similar to property, plant and equipment. IFRS permits revaluation of intangible assets to fair value except for goodwill. So first of all, we will discuss patents. And patents as exclusive rights to manufacture, sell, or otherwise control an inventory for a specified number of years from the date of the grant. So most of the time we'll get a patent for 20 years, so we'll amortize on 20 years. So capitalized cost of purchasing a patent and amortize over its legal life or its useful life, whichever is shorter. So expense any research and development cost in developing a patent. Obviously you will get a patent on certain kind of activities or certain kind of formulas which you have invented, and you'll want to have a legal right on that, the production of that. So obviously you have incurred expenses on that, so you have to a certain that as expense on R&D. And legal fees obviously incurred successfully defending a patent are capitalized to a patent account. Obviously for getting the patent, you have to get the help from your from any kind of lawyer or any kind of legal firm. So these are they also incurred expenses, so you have to also include in that patent account. No, in this can be helps can be explained with the help of the example. For example, national labs purchase a patent at a cost of dollar 27,227,20,000. National estimate the useful life of the patent to be 8 years. National records the annual amortization for ended to December 31st as follows. Obviously, the actual cost is 7,20,000 and the useful life is 8,000. So the annual depreciation or annual amortization would be 90,000. So we'll record amortization expense 90,000 and patents 90,000. So in this case, we will amortize the expense of this patent over its useful life. Now, the other aspect is your copyright. Copyright is the ownership or the exclusive right to reproduce and sell an artistic or published work. That can be a book, that can be a movie, that can be painting. So whatever your work is, or granted to the life of the creator plus a specific number of years, commonly 70 years. So in this case, we capitalize the cost of acquiring and defending it, amortize to expense over useful life. So, what are the trademarks and trade names? Word, phrases, jingle, or symbol that identifies a particular enterprise or product. For example, HTC, Starbucks, Apple, 7-Eleven, Windows, Coca-Cola, Big Mac, and Jetta. So, these are your trademark or jingles. So legal protection for specific number of years, commonly 20 years. Protection may be renewal indefinitely. So this can be capitalized. We can capitalize the cost of acquisition, but we don't use amortization in this context. And then franchise, then the franchise and licenses, these are the contractual agreement between a franchisor and franchisee. For example, the person who is acquiring the franchise can use the name of that big brand, and obviously but they'll bound you that when you are using their name, so obviously you can also follow their marketing and other kind of activities. And so this is called as your franchise, and licensing is same as the franchising, but there are certain difference in certain terms and conditions. With franchise or licensing with a limited useful life should be amortized to expense over its useful life. But a franchise or license with no indefinite life cannot be amortized. Obviously, amortization can be used for those intangible assets which have a limited life, but it cannot be used for those which have unlimited life. So obviously, those franchises or licenses which has indefinite life cannot be amortized. The last thing is your goodwill, and goodwill includes exceptional management, desirable location, good customer relation, skilled employees, high quality products. So all these things are the good impression to the outside world, and they are very much impressed by all the exceptional qualities of resources you have. So this amount, yeah, this goodwill is calculated when you are actually about to purchase any kind of business. So goodwill is recorded as the excess of cost over the fair value of the net asset acquired. For example, in a company, the total value of your assets are 10 million, and you can deduct all the liabilities from it. So but still the people are offering you higher than that. So this is called as your goodwill. The excessive cost that is actually more than the fair value of your business is called as goodwill. This can be provide benefit to the person who is selling its business, but internally is created and should cannot be. It is internally created and should not be capitalized, obviously, and it has no limited life, so it cannot be amortized. So expenditure, obviously, whenever we are actually considering the cost of these assets, so we have when we talk about research and development costs, so these are expenditures that may lead to patents, copyright, new processes, and new products. So all R&D costs are expensed when incurred. Whenever you are incurring these research and development costs, you can expense them. So these are treated like this. For example, a laser scanner company spends $1 million on research and $2 million on development of new products. Of the $2 million in development cost, 5 lakh was incurred prior to technological feasibility, and $1.5 million were incurred after technological feasibility had been demonstrated. The company would record these costs as follows: research expense 1 million, development expense 1 million, 5 lakh, development cost 1.5 million, and cash is equal to 3 million. So that would be the cost whenever you are incurring this cost. So you have to determine then, and you have paid the cash in the case of this. So that's why you have recorded this like this. So statement, presentation, and analysis. First of all, we see that presentation, that how we will present these assets in your financial statements, which is called as balance sheet. So the statement of financial position partial. This is a partial financial statement, balance sheet. In case of goodwill and intangible assets, we'll record the goodwill, trademark, patents, and under goodwill and intangible asset, and property, plant and equipment, land, building, machinery, and accumulated depreciation, net property, plant, under this. So this is how we present our different asset in your statement of financial position. In the case of analysis, we can use ratio analysis. You have discussed different other ratios. So in this case, if you want to see that how these assets are providing us benefits, so we can use asset turnover ratio. In this case, asset turnover ratio actually shows that how much your total asset is, how much times your total asset we converted into your into net sales. So the total you have total 90,000 to 222 sales, divided by 64,782 plus 54,080 divided by 2. That will give you 1.52 times. So this shows that 1.5 time you are converting your average total asset. So average total asset is actually the asset which you have at the start of the period and the asset which you have at the end of the period. So 64,782 is the asset which you have at the start of the period, and 54,080 are those assets which you have at the end of the period. So we'll divide by 2, so we'll get average total asset, and by dividing it by 90,000 to 222, we'll get 1.52 times. That means that in a year, because we are finding annual year asset turnover ratio. So that is that annually we are converting your total asset into net sales 1.52 times. So each Korean won, that is the currency of Korea, invested in asset produce give you 1.52 in sales for LG, if company is using its asset efficiently, each investment in asset will create a high amount of sales. So if the higher turnover ratio will show that the company is more efficiently and effectively using its assets and to convert it into sales. So this will shows the if higher turnover ratio shows that company is are very efficiently utilizing its assets.